Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple or wherever you get your podcasts, be sure to follow and leave a 5-star rating. Well, folks, today we got more big news from the SEC. Yesterday, the SEC released guidance on what's a security and what's not as it relates to crypto assets and digital assets. Well, today, the SEC approved the Nasdaq's move to support tokenized securities trading. This is huge. The Nasdaq is the second largest exchange in the world. The New York Stock Exchange is the first, of course. And we know they are all moving to 24/7 365 trading because of the blockchain technology. It's as Larry Fink, CEO of BlackRock, said a few years ago, tokenization is the future of finance. And as I've been telling you guys, the future of capital markets, economies, and governments will all run on blockchain rails. So this is very big because having the regulatory agency, the SEC, which we know is the powerhouse when it comes to regulations of markets and much more, giving you the stamp of approval, it's significant. So we're going to see all the banks, stock exchanges, and much more get on board. So the Securities and Exchange Commission approved Nasdaq's plan to let certain securities trade in tokenized form, integrating blockchain technology into U.S. equity markets. Under the new framework, eligible Nasdaq participants can opt to settle trades as blockchain-based tokens that trade alongside traditional shares with the same tickers, prices, and investor rights. Tokenization of stocks have emerged as a fast-growing sector, captivating major exchanges such as Nasdaq and the New York Stock Exchange. So folks, eventually, as companies go public, there won't be a separation. It won't be tokenized assets and the traditional versions. They will all be on the blockchain, but we're not there yet, right? The infrastructure has to be built out. They have to figure out how all of this is going to work, as well as with the counterparties and all the moving parts and components, and the pipeline needs to be updated. So you can't just do this overnight and eliminate the traditional versions, right? Also, the consumers need to be educated. Why should they invest in the tokenized versions, right? They need to understand what's happening, why they can trade it 24/7, what are the benefits. So there's education and building that needs to be done. But do you see where we're at? We are in the early innings, and eventually this will all be set up where I've been telling you guys for years. There will be no more opening and closing bell, right? That will be a thing of the past. Markets will run 24/7, be tokenized, be fractionalized. As a result, they are able to be accessible in different parts of the world, bringing in more liquidity. And you can put some of these assets to work in the tokenized version via DeFi and much, much more. So this is really, really great, and great to see the agency, the SEC, is giving these approvals, and they're not waiting for the Clarity Act, but they've got the mandate from the Trump administration as well as members of Congress. And we're going to talk about the Clarity Act just a little bit later. But another example of how things are changing, guys, traders can now bet on the S&P 500 around the clock without ever touching a traditional stock exchange, because the S&P Dow Jones Indices licenses its flagship index for crypto trading on Hyperliquid as perpetual futures gain traction beyond traditional markets. This is a significant update as well. So here are the details. The S&P Dow Jones Indices has licensed the S&P 500 to trade XYZ, that's the name of the firm, to launch the first officially approved S&P 500 perpetual futures contract on the Hyperliquid blockchain. The new product lets eligible non-US investors trade leveraged on-chain S&P 500 exposure around the clock using real-time index data, even when the traditional stock markets are closed. So here's a great example of where we're headed. So the launch underscores the S&P's push to expand its benchmarks into digital markets and has coincided with rising trading volumes and gains in Hyperliquid's HYPE token. Now, I don't hold a HYPE token. It has performed well since launching. I'm sure some of you may hold it, but if you do, let me know in the comment section. But guys, I hope you see the direction the puck is heading in, and why you have to be patient and have the macro view. You got to look at the S-curve adoption. And if you look at a great comparison would be mobile phones and as well as the internet, it takes time, right? You got to build the infrastructure out. When it came to the internet, it was first dial-up, and that was so clunky and so much friction. And, computers were not the fastest back then, right? You had the big boxes and towers in your homes, and now it's a much faster, better experience. Same thing with mobile phones. You had the big clunky bricks from the late 80s into early 90s. Then you had the flip phones, and it was not what it was now. And eventually we got to smartphones and a better user experience, apps, and much more. We are like in the dial-up days of the internet, and maybe the flip phone phase of the mobile phone era. I might be off there, but I hope you guys get the gist of what I'm trying to say. Okay, one of the big factors that's going to allow for more adoption is, of course, the Clarity Act. Now, the Clarity Act has been facing a lot of hurdles because the banks don't want you to earn stablecoin rewards or yield because they want to continue getting their big fat bonuses, and they don't want to give you higher interest rates, nor do they want to give you stablecoin rewards. They want to keep the majority of the money they've been earning as they park their cash at the Fed, and but stablecoin rewards are disrupting that. Well, we've been waiting for some sort of compromise between the banks and the crypto industry, and we're waiting for this market structure bill to make it out of the Senate so it can be signed by President Trump. And if we don't get that sooner than later, it's going to be a problem because this is a midterm election year, and the closer we get to that, it's going to get messy. Nothing's going to get done, right? Well, we got a report here that White House senior official Patrick Witt, who I interviewed just late last year, says they're on the cusp of delivering a durable compromise on the yield issue that pitted banks against crypto firms in moving to a vote on clarity market structure legislation. So sounds like things are starting to move here. We also got an update from Senator Tim Scott, who says that the market structure negotiations are advancing. So he says, I believe that this week we will have the first proposal in my hands to take a look. So we got to get this done. I hope that by the end of March, they have the compromise in place so that the markup can happen in April. So they have to mark up the bill, and then they have to vote on it. So maybe April, all of April, they mark up this bill, and then come May, they vote on it and it passes. That would be the ideal scenario. But, it's usually not that simple. The sausage making process in DC it's not an easy thing to stomach. And my hope is that it can be that easy, but we're going to have to wait and see. There are also, the banks are also fighting back on certain DeFi aspects. Plus you have the ethics aspect, right? Which is why I've been so annoyed by President Trump and his family to like cool it down with the crypto stuff, because the Democrats are going to use that to try to block. Elizabeth Warren and Maxine Waters, they're ready. They've been taking notes. Oh, your meme coin? Oh, we're Liberty Financial, right? So this is why I've been saying, look, wait till the Clarity Act passes, and then you want to do your stuff with crypto? Sure, I don't have a problem with that, especially if it's more on the family side, his kids, versus the president having a meme coin, right? But I digress. I think you guys understand what I'm saying. So let's see. Let's see, folks. I'm still optimistic, but there's been a lot of delays, and the banks are fighting hard. But great to hear that there's some draft of a negotiation on the stablecoin yield situation coming up. And of course, everybody's chomping at the bit to see what the details are. So stay tuned on that. Folks, this episode is brought to you by Trezor, which makes self-custody of your crypto assets easy. Trezor makes beautiful hardware devices. They're great and easy to use. I personally use the Trezor Safe 7 and the Trezor Safe 5, and their devices, especially the new one, the Trezor Safe 7, is quantum ready. It has top-of-the-line security. And Trezor, they were the pioneers of hardware wallets. They started this in 2013. They created the seed phrase setup and much more. And like I said, I'm a user, so I can vouch for this device. And they support all your major assets, Bitcoin and the top altcoins, Solana, Ethereum, XRP, Cardano, Dogecoin, and you just go down the list. There's tons and tons of coins that they support, and they support new tokens as they launch as well. They have a great software suite called Trezor Suite, which helps you to manage your assets, and you can buy and sell within that platform. And they have a hand-holding service, so if you buy the device and you need to talk to a rep to help you set it up, that service is available. Don't worry, they don't ask you for your private keys. And folks, if you use my code Thinking Crypto, all one word, Thinking Crypto, you can get 5% off your purchase. So check them out. Again, I'm a user, and they make beautiful hardware wallets. And this is the safest way to custody your assets, where you control the private keys. So check them out. The links will be in the description. Now, folks, we got some prediction market news here. So Polymarket, which is the leading prediction market platform, acquires Brahma, if I'm saying that right, Brahma, to scale blockchain trading infrastructure. So We know these platforms are very disruptive. And in fact, the crypto industry is facing a lot of battles from incumbents. You got the banks fighting stablecoin yield and DeFi. And on the Polymarket side or a prediction market side, you have the gaming casinos and these folks who are fighting, right? So it's the incumbents. But this is not unlike anything we've seen in the past. It happens in every industry. Just an example would be the taxi commissions fighting Uber, right? But here are the details. Polymarket has acquired financial infrastructure firm Brahma, bringing its team and real-time execution and settlement technology into the prediction markets platform. The acquisition is intended to help Polymarket scale its infrastructure and product suite as it grows. Brahma, which has processed more than $1 billion in transaction volume, will phase out all existing products within 30 days and has instructed users to migrate their funds and positions. Now, I haven't used Polymarket or Kalshi. This is not for me, but look, there are people out there who want to do their thing and bets and all types of different things. Maybe one day I will, but right now, I would rather put my money towards certain blockchains and tokens and make my money that way, but to each his own. Here's a quote. Building reliable infrastructure across blockchain networks and traditional financial rails is hard. There are no shortcuts, said Shane Copeland, Polymarket CEO and founder. So this is kind of why they did the acquisition. So really great stuff, folks. Really, really awesome. Okay, moving ahead, and this is related to Trump's kids with American Bitcoin. So Eric Trump, many of you know, heads up American Bitcoin, which is becoming one of the largest Bitcoin miners. So they have climbed to become the 16th largest Bitcoin holder with 6,899 BTC, and they've surpassed Mike Novogratz' Galaxy Digital. So this is one of the things I look at, why I'm still very bullish. I don't think Trump's kids would be involved in crypto if they didn't see the opportunity to make money, right? Right now, they're down. They're operating a loss because they're mining and they're buying and holding Bitcoin on their balance sheet. But the market's down. Bitcoin's down, right? We're in a bear market. But I think they know what's coming. Legislation's going to pass. We're going to be out of this bear market and Bitcoin's going to rally to new highs, guys. It's all cyclical, right? When you put aside the narratives and you just look at the charts and the fundamentals and the macro, it's all cyclical, right? So this is one of the things I look at, just one now. I'm not saying it's the main reason that I'm looking at. These guys know what's coming. The Trump administration knows what's coming. Trump knows what's coming, right? He wants to make the US the crypto capital of the world. I just wish he wouldn't do his meme coin crap, right? But I don't think they're betting on this to lose money. They are about making money. One thing's for sure, right? Trump loves to make money, and so does his family. So this is a very good sign that they're doing all this and they continue to double down with world liberty as well as American Bitcoin and much more. Okay, moving ahead, Stripe-led payments blockchain Tempo goes live with protocol for AI agents. We are seeing a ton of development around AI agents, which are going to be a big part of the economy. And we've talked a lot about it, guys. They're going to use blockchain tech, right? They're going to use stable coins or payments and to do atomic settlements and much more. So Tempo, a payments-focused blockchain backed by Stripe and Paradigm, has launched its mainnet, bringing its stablecoin payment system out of testing and into live use. The network is designed to handle high volumes of low-cost stablecoin transactions and now includes a machine payments protocol that lets software and AI agents pay for service autonomously. The debut comes amid a broader push by payments giant like MasterCard and Stripe to integrate stablecoins and blockchain rails into cross-border and everyday financial infrastructure. Guys, man, I hope some of it's resonating as to what the hell is being built here. And look at when it's being built. There's a common saying that building happens in the bear market because there's no distraction with price and much more. And I can't wait as we get back into the bull market and all these things, a lot of the building and the testing and proof of concept all go into production, right? And things going live, used by TradFi and real world institutions and companies. And then, many consumers and users using these things that you don't even know it's running behind the rails, right? So this is where you have to do your research and keep up with everything. Okay, final news item. Crypto exchange Kraken freezes multi-billion-dollar IPO plan due to difficult market conditions. I was wondering, It's was Kraken still going to do it? Still do the IPO, especially that we are in a bear market. And here's an example of a saying I've been telling you guys for a while is that no one goes public in a bear market. It's not a good thing to do that because there's less liquidity, right? And investors are going to be tight with their money. So it's a further confirmation we are in a bear market. And I'm sure they're going to wait for better market conditions maybe later this year if the crypto market starts recovering as we head into 2027. Maybe they want to time it with the Clarity Act passing and so forth. We shall see. Could this bear market be kind of short-lived? I think so. And I could be wrong, but I was tweeting about it the other day. We had a lackluster bull market. We did not have a parabolic move, not even for Bitcoin, right? Bitcoin kind of haphazardly went up to 126 and then dumped. It was no retail euphoria. It was not like the previous bull markets we've seen. So it even touched certain Fibonacci levels, guys, that we've been tracking for years, that it had hit some of these Fibonacci levels in the previous bull market. It didn't do that this time around. So if that is the situation on the upside, I can imagine the downside not being as bad, especially you're not having collapses like FTX and all these things that are going to drive incredible sell pressure and fear, right? So, yes, there are macro factors like the war and so forth, but still, crypto for the most part is more mature. They're more ETF holders, and it's not, like your average Joe and Jane who are panic selling. It's BlackRock and Fidelity. They're still holding tons and tons of Bitcoin and ETH and others. So it's very different this time around. So that's why I don't think the downside is going to be as bad. Now, I could be wrong. There could be black swan events that are still ahead, right? But I think logically here, with a limited upside, I don't think there's going to be as much of a downside here. And I think the majority of the downside move we've seen so far for this bear market is completed. Can it wick down, another Bitcoin, another 5K, 10K, whatever? Sure, but the point is we're not dropping to like 15K or 20K like some people are saying, right? Oh, it's over. Bitcoin going to 30K and all kinds of stuff. I don't think that's happening. The lackluster upside does not warrant that deep, bloody bear market. So patience is the key, my friends, and we will recover. And maybe this rally that we're seeing, I know there's a slight pullback today, continues a little higher, and maybe we get a higher low and it doesn't go down to a new low. We'll see, and it builds from that going later into the year, because you can imagine if the market structure bill passes later this year, there's going to be a buy the rumor, sell the news event around it, right? Like we saw with the ETF launch and other things. This is how the market works. This is how market makers operate. So we shall see. We shall see. Lots to think about and pay attention to, but patience and having the emotional control is important. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Be sure to support the podcast by subscribing to my free email newsletter on Substack. It's 100% free. Link will be in the description. Grab a copy of my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto and blockchain technology. Knowledge is power. And folks, we got a big discount going on. Use the code BEAR at checkout, BEAR, to get 50% off the course. It's a one-time fee. You get lifetime access, go at your own pace. Share the login with your friends and family if you want. And it's packed with tons of value, and you're going to hear from experts. So I interviewed a lot of folks, and I asked them specific questions, which have not been published, by the way, publicly, I should say. They're published within the course. So again, you're going to hear from experts, and they're going to break it down, the different aspects of crypto to you. So all the links will be in the description. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.